Hello everyone. Welcome to Cryptocurrency Mobile Mining and Trading. I'm Dixon, and I'm excited to have you here. After countless hours of research and testing, I'm here to bring you the most reliable, real-time updates, insights, and strategies to help you stay ahead in the world of crypto mining and trading. Let's explore opportunities, learn together, and grow our crypto knowledge and profits, all from our mobile devices. Before we jump into today's big story, do me a huge favor. Hit that subscribe button, give this video a thumbs up, and make sure you smash that notification bell. That way you'll never miss out on these crucial time-sensitive updates. Alright, let's get straight to it. Today's major headline is shaking the market. Bitcoin's price has dropped below the critical $98,000 mark. This is happening amidst some heavy selling from long-term holders. What's a long-term holder, you ask? These are wallets that have held Bitcoin for at least 6 months. And folks, they are cashing out. We've seen them sell over 815,000 Bitcoin in just the last 30 days alone. This has created a massive supply overhang, and it's weakening the price support we've been watching so closely. It's a classic case of profit-taking after a significant run-up. So, let's break down the key highlights of what's happening right now. First, Bitcoin fell below the psychological $100,000 level as these long-term holders dumped over 815,000 BTC. This is adding immense supply pressure to the market. Second, and this is a big one for traders, there's nearly $581 million in long liquidations sitting right around the $97,800 price point. This significantly raises the risk of a deeper price sweep, a sort of domino effect if that level breaks. And finally, we've seen repeated tests of the $100,000 support level, which is a strong signal of market exhaustion. This is all happening against a backdrop of ETF outflows and some broader macroeconomic uncertainty. As of the latest report, after dipping to $100,700 on Wednesday, Bitcoin slid even further, trading near $97,813. That's a 4.2% decline just on the weekly candle. The whole situation is being driven by these long-term holders taking their profits. According to market data, this is the largest amount of selling from this group since way back in January 2024. Many analysts are speculating that this is a repeat of what we've seen at past cycle peaks. The experienced holders, the OGs, are selling their coins after a months-long rally. CryptoQuant reports that this sustained distribution, coming from wallets holding for 6 months all the way up to 7+ years, is creating that supply overhang I mentioned, and it's making it harder for the price to find solid ground. This selling is also happening at the same time we're seeing a big increase in leveraged positions around these key price levels. Data from CoinGlass shows that almost $582.75 million in long leveraged Bitcoin positions are clustered right near $98,000. This is a powder keg. It highlights the potential for a very sharp, very fast price drop if volatility picks up. While futures traders were previously eyeing upside targets around $110,000, the current market action is suggesting that we might need to revisit the lows first before we see any of that upside. I know this can sound a bit complex, so if you have any questions at all, please drop them in the comments below. I read every single one and I'll do my best to answer. And hey, if you're finding this breakdown useful, please take a second to hit that like button. It really helps the channel and tells YouTube to show this video to more people who need to see it. Now, let's talk about liquidity and market structure. Analysts who track Bitcoin's liquidity landscape have noted a growing imbalance between support and resistance. The trader known as Dan Crypto pointed out a big cluster below the local lows at $98,000, $100,000. He's noticed a series of slightly higher lows forming just above this critical zone, which is a fragile pattern. What about market sentiment? It's pretty mixed right now, but definitely weak in the short term. Interestingly, data from Hibla Capital shows that on Binance 68.9% of international BTC orders are still on the long side. This means a lot of traders are trying to defend that $100,000 floor, but crypto prices don't exist in a vacuum. Broader macroeconomic events are playing a huge role here. The recent drop in Bitcoin was linked to a general risk-off mood across all markets. Traders were selling tech stocks and cryptocurrencies because of fears of an economic slump. The US government recently reopening after a long shutdown, combined with hawkish comments from Fed Chair Jerome Powell, has really dampened the hopes for interest rate cuts. The FedWatch tool now shows the chances of a rate cut at 66.9%, down from 85% just last week. On top of that, weak jobs data, like US non-farm payrolls decreasing by 50,000 in October and weekly job losses exceeding 11,000, is just killing any market optimism. And of course, when Bitcoin sneezes, the rest of the crypto market catches a cold. Bitcoin's weakness has dragged down the broader market. So, what are the short-term prospects? What do the experts think? Well, they're split. Pepperstone strategist Dylan Wu thinks Bitcoin could still reach new heights in the medium term, but he expects volatility to stay high in the short run because of declining institutional investment and those ETF withdrawals. On the other hand, BitBull CEO Joe DePasquale has a cautiously bullish outlook. He believes the overall Bitcoin uptrend is still intact, pointing out that buyers are continuously forming support levels and generating higher lows in the larger market cycles. Prediction markets like Myriad Markets are showing a 54.7% probability of Bitcoin hitting $115,000 before it would fall to $85,000. This reflects a cautious optimism among retail investors. But for now, analysts all agree, the immediate test is that $98,000 to $100,000 range. If buyers can't hold this line, we could see a much deeper correction toward mid-cycle support levels. Let's put this into a bit of recent context. Just back in October, Bitcoin was making headlines when it temporarily hit an all-time high of $125,000, but since then, we've seen it drop below $100,000 multiple times, driven by profit-taking, those macro worries and ETF outflows. If we look at historical trends, periods of heavy selling by long-term holders are often followed by a period of price consolidation before the next big leg up. Volatility is extremely high right now, and smart investors are keenly watching those liquidity clusters, support bands, and macroeconomic indicators. The coming week will likely decide whether Bitcoin can hold its ground above the six-figure range, or if we're going to revisit those June 2025 lows near $98,000. This is a critical time in the market, and staying informed is your best defense. That's why I created this channel. We're going to navigate these choppy waters together. Again, if you haven't already, please subscribe to the channel, like this video, and hit that notification bell so you're the first to know when I post new updates. The crypto market moves fast, and you don't want to be left behind. Your support means the world and helps me continue to bring you this kind of in-depth analysis. Thank you so much for watching today. I hope you found this breakdown valuable. Remember, I'm Dixon, and I'm here to help you navigate the exciting world of crypto from your mobile device. Don't forget to leave your questions and comments below. I'll catch you in the next video.